Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today I'm going to dive into uranium, do some uranium ratios. I know people are excited about the moves that are occurring in uranium, and we can quickly touch on uranium futures pricing against other assets. We can also check out the uranium URNM ETF versus other assets as well to see how it's performing and if we're outperforming other sectors. I think it's fairly obvious that we're getting a large outperformance of uranium versus the other sectors. That's why everyone is so bullish on it. But as we continue to outperform other sectors, we are eating through some of that valuation runway. It's always good to know kind of where you're at in that valuation runway. So let's dive in. Let's take a look and see how these things are, how uranium's performing against other assets. So here's the setup. Again, just a big kind of overview real quick. Generally, you get a period where you get under performance, you get a basing period. So this is kind of stage 4 in stage analysis. Stage 1 is a basing period. And now we're going into stage 2, which is an outperformance of uranium versus other asset classes. A lot of the times what occurs is you come and you hit this resistance line. You'll hit your head on your resistance line. You'll consolidate for a while. Generally have a downward facing falling wedge sometimes. Sometimes this tricks people out and it looks like a shoulder, a head and a shoulder that people draw in there and they think it's going to fall to the downside. Um, that's not the case. I call it the lead-in pattern for all these commodity bull market. This is occurring in a whole bunch of different commodities, just an FYI. This same type of pattern. It's in dry bulk shipping right now. It's in oil that's also developing. It's in a whole bunch of different sectors of commodities. Either way, uranium is killing silver. So this is uranium, this is silver. These are all futures pricing, and we are just ripping to the upside, outperforming massively. And what you're going to see is you're going to see the same type of setups across the board. This is uranium versus the S&P 500. The S&P 500 is the stock market. And you can see that uranium, the futures pricing, is outperforming. And notice that we continue to get these same types of squeezes into the corner here before these big moves. And that was the lead-in pattern that I talk about a lot in a lot of these different commodity bull markets. And I'm seeing this in other sectors as well. Uranium versus gold. So this is the future pricing of gold and uranium. And this is a good measuring stick. Gold used to be a backed by our currency, and it was a great measuring stick for inflation adjusted. So I'm going to take a move here. Oh crap, grab the wrong one. 1 second, guys. I want the price range. The price range, we can still outperform gold by about a 4x. So uranium can go up 4 times that of gold. Here's uranium versus crude oil, absolute domination here. But keep in mind, there are limits at some point where things just get too expensive, even for uranium. And we could go way up and it could continue to go up. Now, here's another thing to think about is previous bull markets in uranium were basically in an area where there was no deficits in the inventory. It was a period where credit was created faster than what supply was for most of these commodities, and money's just rotated. So what we're looking at here is I think we're going to run into deficits, and we could see the ratios push to areas that we've never seen in history before. That is a possibility. This is uranium versus crude oil, and it's outperforming and has broken out of this downtrend line. Uranium versus copper, there's your basing pattern. We've broken out of the base, and it's running, run, Forest, run. Uranium versus natural gas. We are at levels that we've never seen before, at least going back to the 2000s. So we paused at this resistance level and we've broken out and are running to levels we've never seen against natural gas. Uranium versus Dow Jones Industrial. Downward move, basing pattern, and now we're working our way up and we are accelerating the move. It is in full run. You can see the lead-in pattern where we got stuck, squeezed up, and broke out. Uranium versus platinum, absolute domination. You can see again where we squeezed or paused in this general location and then ripped it. That's the theme that we're seeing across the board. Uranium versus the M2 money supply. There's your squeeze and then your break. That's a big run. Look at the size of those candlesticks, guys. And we've got a long way to go from about another four times higher against the M2 money supply. And we would be back to 2007 levels when accounting against the money supply. We still have a long way to go. Four times. That's $400 plus uranium price. 400 plus is where we would be back if we were to replicate the 2007 price against the M2 money supply. That is really your ultimate measuring stick, is to go right against the M2 money supply. That is inflation adjusted. Inflation adjusted is not $200 a pound. Inflation adjusted, $400 a pound. So coming down, that's our uranium moves there. Let's go to URNM and do a quick look and see how that's doing against other sectors. So URNM versus XLE. XLE is a larger oil and gas ETF. And what we want to see is we want to see a squeeze up. We want to see a squeeze. And usually you squeeze in about three, we call it the three humps kind of consolidation. We did a three hump consolidation, squeezed up, and now we're breaking and running to the upside. So URNM is outperforming XLE, and we are still looking quite good. There's not a ton of selling pressure for a reversal here, so I think things are still looking good. URNM versus XOP. XOP is another oil and gas ETF. And what we're looking for, we don't want to squeeze up to like a corner or break a channel. That broke down and we consolidated for a little while. We consolidated and we had a break to the upside, and we're running, run, Forest, run. But we are coming to levels where previously we were at a peak. Is this going to peak and turn where XOP starts to outperform URNM? I wouldn't go that far, but we'll continue to monitor it, and it is going to levels where it peaked before. We might get a little bit of resistance. URNM versus the CRB index. So this is the index of commodities. Again, we squeezed up. Here's your squeeze. We broke out of the trend line there, and we've been running. Keep in mind that we peaked here last time in 2021, and you can see that we are getting a little bit of a wick at the top, a little bit of selling pressure. So if we dive in, there's your selling pressure. Now, that's not necessarily a reversal candlestick, so this could still run. To me, it looks more like a flag pattern or something like it's squeezing up to some corner. And it's not a huge selling pressure where it's closing strong to the downside. That's what we saw back here, is you'll start to see large selling pressure candlesticks form, and you start kind of coming into bearish engulfing patterns there. I don't think we're topping yet. I think we'll see it before, and I will let you guys know if I see something whenever it does occur. URNM versus OIH. OIH is the energy service ETF. And you can see that we came up and then we went into a falling wedge. And the three hump consolidation broke out, retest, and jumped off that support level. The blue line is the support level, and we've been outperforming OIH. Again, not a ton of selling pressure up here. If it's going to be a top, you'd see follow through with strong closing candlesticks. But again, we are eating through some of the valuation runway that we have compared to historical tops. And this can easily keep running way above that. So just kind of letting you guys know where we're at. URNM versus REMX. Geez, look at this. We squeezed up into the corner and just an absolute moonshot against REMX. And again, this is a combination of URNM going up and REMX going down to get this large outperformance. What this means, you can also look at this. REMX is the rare earth metals ETF. And you can also look at this like you can buy more shares. URNM can buy more shares of REMX. So your wealth measured in REMX is going up. And you want your wealth to go up against all these other assets. URNM versus COPX. Again, this is basically up around all-time highs compared to the data that we've got. It's got a little bit of selling pressure here, but again, we're running out of these valuation runway compared to history, all going back to only 2020, is kind of eaten up to some extent. And URNM versus S&P 500, it's been moving on up. We're kind of above 2021 highs. And then we look at it, it's not too much selling pressure. But again, the valuation runway could be eaten up a little bit against some of these other asset classes. We have outperformed compared to the short history that we've got. We can also look at URNM. Well, let's do URA divided by UX1. And this is a long-term look at where we are priced against the metal, the uranium futures price. So this is URA, the ETF, versus uranium. We've come on down, we've come in the base, and we are still at a very low level. This is cheaper than any time in history. So URA is cheaper against the physical metals pricing than any time in 2020 and 2016 at the beginning of the bull market. So we are still incredibly cheap when you use it against that. And we can also do URNM divided by UX1, which is squeezing up still. And generally what we see is a three hump consolidation. That is exactly what we've got. This is probably a very good buying opportunity to be looking at URNM when you price it against the physical metal. We're squeezing against that. We could easily get a break to the upside of this falling wedge. And when we look at URNM straight up, you can see that we've broken all-time highs here. And a lot of the times what occurs is you break the all-time high. A lot of the time you get a pullback, maybe even all the way to the spot that it broke out from. I'm not stating that that has to happen, but it could happen. Or this gap gets closed here at about $52. We could see a pullback and then a rip to the upside. And the reason I get a little bit more confidence is the URNM to UX ratio is squeezing in a falling wedge. And that's generally a good spot to be looking. And again, if you guys are interested in individual companies, this is exactly what we're going over in a lot of our question and answer sessions that we hold on the website. We go over the individual companies of all this, but this looks fantastic to continue higher on, versus dollars and to move higher against the physical metal. And we are at very low valuations for the ETFs and equities against the physical metal and uranium. So that's what I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, and subscribe to the website if you'd like. Join our community. I've got ratios of individual companies out there on the website if you guys want to look. I've got my favorite uranium companies if you're interested. Use the word discount, the coupon code if you'd like. But that's what I've got for today. We'll catch you next time. This is Finding Value.